Why do we seem to not care and just, they talked about Taylor Swift, whatever earlier, shaking off the inflation data?
Well, I think for one thing, the market was expecting a hot number. It's been largely previewed. And inflation is good for real assets. So stocks are going to do well in an inflationary environment as long as the Fed doesn't act to pull it back too much. And I think given that we're at the zero lower bound, there's an asymmetric risk for the Fed moving here. And so I think it's going to take them a longer time to move. And I think that's what the market is reflecting. That's why stocks are still have a green light.
Yeah, Kevin O'Leary, you agree with that? The green light does appear to be there. In fact, not only is it green, I feel like there's somebody honking at us from behind because the market is taken off this week.
A little inflation, a little dabble dewey of inflation is actually good for corporate pricing power. And it really is constructive for equities. You go back in history, right back to 82. I mean, when you start to see inflation creep in, and I mean real inflation. So, just 2 weeks ago, it was a different dialogue that was temporary inflation caused by supply chain issues. That's not the case. We basically overstimulated in the last 2 years. It's just been too much cash coming out of the helicopter. And so at the same time, if you own a good quality company that's servicing consumers, they're able to raise prices in inflationary time because their input costs go up. And in some cases, their input costs are not as high as what they can raise in pricing, and you get margin enhancement. That happened in 82 as well. And I think we're going to see it here. I'm very constructive on equities. I would be avoiding fixed income here because sometimes things get out of control and the Fed has to move a little faster. And that might happen in Q1 or Q2. And that's where you get slaughtered in long-term fixed income.
Yeah, Rob, I'm going to destroy the show right at the top. Why not? And go super wonky and just chase the viewers off. I want to show the 2-year yield. We never talk about the 2-year yield, and I'm only bringing this up because it goes to what Kevin and Amy were just talking about. The 2-year note, the yield spiking. Why do we look at this? Because as Tom McClellan and other people say, the 2-year is what you watch when you want to know what the Federal Reserve may be doing. And with that yield up, the 2-year is saying, and the bond market is saying, Rob, is it not, that we may need to have more and faster rate hikes next year than the Federal Reserve is outlining. What's your take on that? Stocks and inflation.
Actions speak louder than words, Sully, and I think the Fed is absolutely behind the curve. The taper will happen faster. I think they're going to announce it next week. The best indication that they're behind the curve happened back in September, where they pivoted from focusing on the headline inflation numbers to tightness in the labor market. They did not want to take the chance of a weak headline number, and that was very clever. They denied that they were behind the curve, but their actions spoke louder than words. And if you look at the data, you quoted the highest since 82 number, but you look at the core data, the highest since 91. You look at the food and energy component, the highest in 13 years, and the most sticky, which is the shelter component, the highest since 07. And many were worried. So I think markets are reacting because the Fed's pivot is going to be viewed as a blessing. If anything, staying too stimulative too long adds to some of the things that were driving prices higher and creating more inflation. And if you just look at the consumer sentiment data today, it rebounded because the survey showed that the biggest worry was inflation. And when asked if it was employment or inflation, 76% said inflation. And the bottom third of earners, they were the most optimistic because they expected significant increases in their wages, the highest since 1981. So when you mix all this together, I think what you have is probably some volatility, but because we're stabilizing price, because we're reacting responsibly, if the Fed can thread the needle, my bet is that that's going to be a positive for markets. We're going to get scared along the way. There's no question about it. We're going to get scared. But I think if you buy quality stocks with pricing power, you're going to be in a good place.